Hey, Sharath, hi.
Hi, Kapil. How are you doing?
Good, good.
What we'll do is, folks, we will begin the webinar right away. I'm going to be introducing Kapil to you all. Kapil is the founding member of Volt with previous experience at PricewaterhouseCoopers, IDFC. He's been in the lending space for quite a while now. In his past experience, he's had a book of anywhere between 1,000 crores. So, without any further ado, I'm going to introduce Kapil. And Kapil, the floor is all yours.
Hey, thanks, Sharath, for having me. Hi, good morning, everyone. Especially very excited to see people joining on Saturday morning to hear about finance. Really happens with me. So, yeah. Sharath, as we discussed, I'll take the format as quickly take you through what the product is
Sure.
and let me know when to pause for taking any questions that people.
No, so each slide that we completed, there is something of importance because a few of my audience have gone about asking questions in their email,
Hmm.
and if there is anything in particular that I see that is covering, then we will stop there. We will take Q&A towards the end.
Sure, got it.
Yes. Uh,
So basically, we all have been doing mutual fund investments. You have been doing through Sharath, right? What we want to today bring you is essentially how you can get a credit line against mutual fund saving for different use cases, right? So whether it's a home expense, as ma'am was saying, an education expense or a working capital, which is again requiring capital across different times of period of a month or year, where it's a very experience depending on the season, how you can serve that with your mutual fund savings, right? So currently what you have known is like what is the potential of mutual funds, but what is the hidden potential, what you can also get is something we'll touch upon today, right? So I'll start with the first point, which is essentially why do people invest in mutual funds, right? So there are financial goals to be met. Very simply, one of the main use cases that I can see in the group is a child's marriage and education. The good thing that financial advisors today or mutual fund distributors have brought in is people plan for these things in advance. You're planning 10 years in advance for a child's education or marriage. That if I want to send him by doing MBA to a foreign country, I need 1 CR of surplus. I need to plan for it today. If I want to buy a car, I'm not taking a car loan, which is a depreciating asset from day one, right? So if you take a car loan, 14 lakh car loan, right from day one, when you get out of the showroom, the value of the car is like 50%, 60% only. Plus, you are paying a loan of, let's say, 9%, 10%. So that's a depreciating asset. People are now investing and saving to buy that car, which is much more financially better, right? If you want to buy a home, right, better to save it, pay as much as you can, and not to have that tax burden, right? Retirement savings is a very important use case, which is very good to see that India is picking up. And last and all, the wealth creation part, when all the critical things of your life are done, what you need money is essentially for wealth creation. I want to have that X amount of liquidity, money available, which whenever I need it, I can get it. Right. So that is the plan. But what happens is when during this life, right, and let's say personally speaking, I'm 33 years old, I'm married. Whenever you progress in life, there is money requirements that keep on coming. That is short term, medium term money requirements, right? For example, your home will have issues, whether it's repair, whether it's doing distemper on the house, whether it's improving on the house, home renovation. It requires small 2, 3, 5, 10 lakh expenses with unwanted hospitalization, right? Whether it's you want to go to a foreign tour, but you also do not want to miss out on the financial plan, right? So, given India is now becoming one of the strongest passport and also trying to go abroad, for family tour is one of the big things. Buying a car, what people generally do is make a mistake that they redeem mutual funds, forgetting about their goal for the short-term gratification, right? So what is happening is there is long-term goal achievement, long-term gratification, and there is short-term gratification, which is this. What most of the people are doing is they are redeeming their mutual fund, letting go of their financial goals because of their short-term requirements, and that is what we are here to solve. For all your short-term requirements, we have a solution. Now, I'll give you a very quick figure around it so that people have an idea here. AMFI came up with this figure that 50% of the mutual fund investors redeem within 1 year. So what that means is, and if you can take it within 2 years, around 70%. So what you can understand is majority of the population, and I'm assuming since we have 20 people on Saturday, so they are much more smarter than the 50, 70% that are there. So what is happening is majority of people do not even see the wealth creation because of the requirements or without the lack of discipline. To solve this, this is our vision. That is what why we came up with the idea of providing credit limit, and that is why Volt Money was born. Our idea is very simple. We provide credit line against mutual funds. So if you have a short-term money needs, you should not redeem your mutual funds. You can pledge it and take a loan against it and repay whenever you want, right? So we take care of a short-term need, so your long-term goals do not suffer. That is the idea. If you're investing time over time to increase your essentially wealth or accumulated wealth, that goal, whichever, whenever it's planned, whether it's 10 years, 15 years, 20 years, 25 years, whenever it's planned, you do not break that rhythm. If you need a short term cash need, you pledge it, take money out of it, kind of technically wrong to say, but kind of have a proxy savings account. You pull that money out, repay anytime, but you let your money grow for you, you let your money work for you so that you can achieve your goal on time. So Volt Money supports your short-term, medium-term cash needs instead of redeeming. That is the broad idea, right? Now, what is the impact of redemption? I want to first touch upon that, and how do we do it is the second point. Okay. Now, whenever someone is withdrawing money, right, it takes 5 to 10 years to develop a significant corpus, right? So if you're investing 10 lakh rupees or if you're doing a 1 lakh rupee SIP a month, over 5, 10 years, you develop a corpus of 1 crore, 50 lakh, 10, 15 lakh. But when people are withdrawing, what they realize is I'm taking out 10 lakh rupees, I'll pay it back in 10, about a month or 6 months from now, and again invest 10 lakh rupees. What they don't realize is the cost of redemption. What is that cost of redemption? So I'll take you with a very simple mathematical calculation on explaining what is the cost of redemption, right? What is the impact on your financial goal? Let's say at March 23, you have 10 lakh rupees, right? You need 10 lakh rupees. You can go about redeeming 10 lakh rupees, right? Or you can set up a 10 lakh rupees, a credit line against mutual funds and let your mutual funds grow. Now, when people withdraw this 10 lakh rupees, right, and I'm taking a calculation that if your money grows at 12% per annum only, the CAGR of 12% per annum, your portfolio CAGR, I believe Sharath can tell you better, but presumably what we understand it would be higher than this because Nifty conservative return over long period is 12%. So we are taking a very conservative assumption here. This 10 lakh over 10 years at just 12% per annum growth rate becomes 27.7 lakh rupees. So when you're redeeming or when a customer is redeeming 10 lakh rupees, the redemption amount is not 10 lakh rupees. Keep in mind that this amount is 27.7 lakh rupees, which is the amount that I had invested in, right? What we aim to solve is, let's say, if you do not redeem here and set up the credit line with Volt Money against mutual funds, right? Even if you withdraw that 10 lakh rupees over the 10 years for 4 years on an average, right? मतलब 10 साल हैं, you're taking out money 10 lakh rupees on an average for 4 years. You are taking out 6 months, 1 year, 2 months. Cumulatively, 4 years taking on an aggressive side. You'll just pay an interest of approximately 4 lakh rupees around, right? Even when you're using this, net your mutual fund gain with using loan as mutual fund and keeping your mutual funds intact will becomes 23 lakh, right? So that is the beauty of not redeeming and using a credit line against mutual funds. I'll tell you very quickly, this is not a new product. The ultra HNIs have been using this for some time now. Whenever you read in news, what the executives of the corporate world are using is loan against shares only. What is happening is now we have democratized this product for essentially everyone so that even if you have small investments or big investments, you can set up a limit as low as 25,000 and as high as 50 CR also. So that is the idea. Now, touching on the first thing, what is the benefit of Volt Money's credit line against mutual fund? First is whenever you're needing money, if you're withdrawing from a mutual fund, let's say some funds have an exit load criteria that if you withdraw within 1 year, you have to pay an exit load of X% or whatever is that, right? If you do not withdraw within that time and if you have that liquidity constraint, you can take out money and repay it anytime. That way, you're not charged an exit load on that mutual funds, right? So the first benefit, you're not charged an exit load if there's an exit load on that mutual fund. Second, and the most important benefit, what people don't realize is one of the biggest thing in mutual funds compared to let's say a fixed deposit product is every year you are charged tax on the return that you're getting. Whereas mutual funds let you compound on the returns and you charge interest at the end. So the amount you can delay over time is the benefit you get over compounding, right? But when you redeem for a short period of time, if you're redeeming 10 lakh rupees and 7 lakhs or 5 lakhs is the profit, as soon as redeeming, you have to pay 50,000 rupees of tax if it is LTCG and higher if it is STCG of 15%. So the moment you're withdrawing a lesser amount, you're increasing tax liability, right? The biggest thing here comes is you can get that liquidity against that mutual fund, plus you avoid the tax, hence increase the rate of growth of your mutual funds for longer time period. So this is one of the biggest benefits which does not seem to a normal eye. But if you think about from a mathematical perspective, this is one of the biggest benefit that you have when you're not redeeming and using this loan against debt facility, right? Third and most important thing essentially is, which I feel genuinely more subjectively, is you are timely able to achieve your goal, right? Everyone does redemption at some point of time. I'll genuinely tell you there are people in our office who for marriage have redeemed mutual funds, right? When they came upon this product, when they joined it, they were very surprised that this is something that the corpus that you invested for goal achievement should be only redeemed if your goal is achieved. There should be no unwanted redemptions or unwanted requirement that should result in redemption. So the main important criteria which I feel genuinely is timely goal achievement for customer due to redemption avoidance, right? And fourth and fifth point is essentially we service for majorly all customer types, individual, unified, HUF, corporate, and it is also available for business customers also. The process I'll touch upon that later. Now, we've talked about what is the benefit. What is the product feature that enables this benefit? I'll quickly go on that. First and foremost, it is a credit limit, not a term loan, right? I'll also take an example to explain how that impacts. But what it means is, let's say you have a mutual fund of 10 lakh rupees, you set up a credit limit of 5 lakh rupees, you only pay interest on the amount you withdraw, right? You do not pay interest on the 5 lakh rupees. What this means is if you have a 5 lakh rupee in a credit limit and you withdraw 10,000 rupees, you only have to pay interest on that 10,000 rupees, right? So that is the first thing, that you can set up a limit of 25 lakh. But if you use only 1 lakh rupees, you have to pay interest on that 1 lakh rupees. But you have the access to capital. You have the liquidity ability of that 25. Right. This is the first and most important point to realize. This is a credit limit which gives you very good access to capital with very low constraints. So only pay interest on amount withdrawn. Second is it has a very low interest rate of 10.49, which I'll show it to you later also. Third, so just to compare, the interest rate is very low. Let's say if you check on personal loans, it comes between the range on an average of 14 to 15%. If you're a wealth customer, it will come in the range of 10.49 to 12%, but with a processing fee of 1% or 2%. That is the idea. So it has a very low interest rate, second point. Third, if you talk about it, loan against securities historically has been a product, but it has been a very tedious product. It used to take anywhere between 15 days with a lot of documentation to complete it. What Volt Money has done is it has digitized the whole process. So I'm very proud to say that end-to-end process for completion generally take around 5 to 10 minutes if you have everything ready. I do not need anything to be uploaded from your side, right? I do not need your current account statement. I do not need your Aadhaar physical copy. No one will come at your house, nothing. It's 100% digital 5-minute process that can be completed, and over time, then your limit is lodged and you can use it, right? Fourth and most important point, how much do you get on the mutual funds, right? So you get 50% of the present value. What this means is we have 5,000 plus mutual fund schemes approved, which is like 95% of the overall AUM of across mutual funds. On equity mutual funds, you get 50% of the present value. So if you have 10 lakh rupees of mutual fund, you get 5 lakh rupees limit on equity. If you have 10 lakh rupees of debt fund, you get up to 80%, which is 8 lakh rupees of limit. If you have a liquid fund, it gets up to 90%, which is 9 lakh. Let's say if you have a mix of equity and debt, it is, let's say 10 lakh equity, 10 lakh debt, it is 8 plus 5, 30 lakh rupees of essential limit, right? And this is all automatically applied. ELSS funds, which are unlocked, are also approved, but classified under 50%. Why 50%? It's at the current point, there is an RBI cap on what percentage we can lend on equity, which is capped at 50%. So at a regulatory level, essentially no one even in physical process, you cannot do more than that, right? Fifth and most important point, which I feel genuinely is, which you will very rarely find in personal loan product, is there is a prepayment clause. So if you have taken a loan and if you received the money, there is no way you can pay the money earlier and reduce your tax. There is generally a prepayment charge of 5% of the principal outstanding or some fixed amount, right? In this case, there is zero prepayment of foreclosure charges. What this means is you can take out money today, repay me after 2 days, and you have to only pay interest for 2 days, zero charges for prepayment. You can take out again after 5 days and again repay after 7 days. You will only charge for 7 days. You can do this like 100 times during the year, and there will be no charges extra for this. You only essentially have to pay interest for the amount you withdraw and the days you withdraw. So as simple as that. So it is kind of like having the 100% flexibility to withdraw money and repay anytime you. Second last and most important point is when you process it, we provide the disbursement within 24 hours. So most of the cases, there's a same day disbursal that is happening. Actually, it happens faster in most of the cases, but to be conservatively, it is the same day disbursal. And the last point essentially is the minimum limit that is set is 25,000. So even if you've started mutual funds or if you want to set up a lower limit to try out the product, you can start with 25,000. Max limit is 10 CR depending on the mutual funds you hold as per the criteria. Now, let me clarify. Volt is a lending service provider currently. So, what we have done is we work with two AAA rated lenders. The first is Tata Capital, which is a known lender and everyone is aware about it. Second is Bajaj FinServe, which is again a AAA rated lender. So, what Volt Money does is it sits between the two lenders. We give you the best rate, best product available with the same process. Essentially, you only have to interact with Volt for all your needs, whether it's setting up the limit, utilizing the limit, any questions you want to answer, any query you have, anything, you just interact with Volt. From a customer perspective, there is not a requirement to be interacting with the lender. But in case if you want to, you can happily go there. What does this mean is essentially RBI classifies the neobanks and all of these digital companies as digital lending partner or lending service providers, where we are a layer on top of these legacy NBFCs and banks, and we have digitized this product so that more and more people can use it with the effect of technology. That is what we do. Now, quickly clarifying the charges. The charge is essentially 10.49% on reducing balance. What does reducing balance mean? I'll explain in the next slide. What this translates is if you withdraw 1 lakh rupees, keep it for 1 month, you just pay 862 rupees interest, right? Processing fee is just 499 per year, essentially. So if you set it up 499 rupees plus GST, next year you can renew it at 499 plus GST again and go ahead. That's it. So if you have taken, let's say, 1 lakh rupees, at the end of 12 months, if you want to keep that money and again keep on utilizing it, you just renew the limit at 500 plus GST, same by two, 3 clicks, and you can keep on renewing it again till infinite number of times, right? Renewal again, sorry, I touched upon earlier, is 499 per GST. Apart from that, there are no hidden charges. The processing fee includes lien marking charges, which is charges to CAMS and KFintech, any document charges that are there, any GST that is there, any lien removal charges that are there, everything is included in it. So as simple as that. Now, some few questions which I feel generally.
No, one sec. Sorry to interrupt, Kapil. Let's stop sharing. I mean, let's go to the very first slide of this presentation. And I think instead of we touching on the FAQs, let's get the audience to participate and make this a little more interactive instead of a one-way conversation. So everybody, I mean, you know what, Kapil, stop sharing the screen. I get to see many more folks on the monitor. All right, ladies and gentlemen, any thoughts, any questions before I put a use case scenario? I mean, I'm sure Kapil touched upon a couple of them, but some of them are like, Sharath, if you're working with you, then why do we need loans? We've already been saving up for the goals. Where's the use case scenario? So I have a couple of business owners on this call. There are very specific use case scenarios if you learn taxes really well. So I'd like to hear from you all. What questions? Any clarifications at all, or any pointers? Anything that you all have thought in terms of how you could make better use of this tool or this opportunity with Volt?
Sharath, I have a question here.
Is that Shruti?
Yeah.
Video
Hi.
on. I don't take questions if the video is not turned on.
Okay. Hi.
Hi.
Let's say our portfolio is some X and we did some X
Why say X? No, if you're saying, then let's say 10 crores. Why are we going less X?
But we don't
10.
have it. So what?
That you know, no, that you and I know, not others. So let's say 10.
So if we needed only for 1 or 2 CR, let's say, then how could you differentiate like which MF on which securities they are giving the loans? Like how could you filter that? What kind of substantial?
Very good question. So here's the thing, Shruti and everybody on this call. First of all, when the way how I'm looking at using this tool for all of you all because the way how I've seen your liquidity, I know for a fact, because of how we've been managing our money, we will not need to use loans to fund our specific goals. So how Kapil's presented this is for mostly people who don't manage their cash flows really well. I mean, all of us are a class apart, but how we're going to be using this is going to be using debt to make much more money than what we currently have. It's not necessary only to fund gold. So all the case points that Kapil mentioned is they can definitely be used. So to answer your question now, Shruti, just because, obviously it's in a sequence. So I have, let's say, 10 crores of money. That's my net worth. And assuming bulk of us, because we have money is only in equities and we put money in debt only when we're trying to do an STP or, we are planning to buy a gold that is in the short term, you're assuming that you will have only 50% value, what is that? You have only 50%, what's the word I'm looking for, Kapil?
Present value of mutual fund?
Yes. So if the present value is 10 CR, what you can actually withdraw or borrow against is 5 CR. Now, what ends up happening, Kapil will give us a walkthrough of how this is done. The list of all these different mutual funds will show up. Okay. And you can select which are the ones that you actually want to go about withdrawing or borrowing against. So please understand, we are not borrowing, right? Let's say if you were to take an education loan, you're going to the bank and the bank is saying, hey, you know what, do you have a collateral to give? Then you say, yes, I have a property of mine to give as a collateral. If you have 2, 3, 4 properties, you can choose which property you want to go about giving as a collateral. Correct? You are not selling the property. You're just giving the paperwork of that property to the bank. That's exactly what you're doing over here. Because this entire process is digitized and all these units are available either with your CAMS or with KFinTech, all these funds will show up and you have a choice. Quite frankly, it really doesn't make a difference which one you select because the performance is not going to get affected. Neither are you going to be pulling out your money. Right? So answer to your question is you have complete choice because it's available online unless you select. See, all the steps are going to be done at your end.
Okay.
Correct? None of these papers, none of these stocks are going to be sold. And I'll tell you how I'm looking at it. For all the families that we're planning to use this as a, the reason why I'm introducing this to my audience, we will not borrow at against 50%. We will borrow only at 25% of whatever is the value. Why? Because there is a concept of margin of safety. Now, let's assume we've borrowed it today when the markets are at all-time high. Or let's say we did this in January 2020, right? After 3 months, COVID happened. In 1 month's time, the market fell down by about 35, 40%, depending on what kind of stocks that we had, or rather what kind of funds we had. Now, what ends up happening, your value of what is your actual fund value comes down to, let's say, about 6 lakhs or 6 crores in this case. And if you borrow to the maximum limit and then from there again it falls, then in order to, for Volt to protect its, or not Volt, in this case, the lenders, to protect their downside, what they will go about doing is they will sell the units that you've got leaned or you've given as a collateral. Okay. Is this making sense? So it is not that you just because you got 50%, let's go and borrow. Please don't do that. I will show you, you know what, Kapil, can you make me a host, please? I'd like to share my screen. How many of you are aware that we purchased a new office space?
Yeah, I will.
Thank you very much. So,
yeah, congratulations.
Thanks, Ganesh. So the reason why I'm doing this is now I'll show you one more use case scenario of how I've used this. Now this is Sharath here. Okay. That's my available credit limit, which is 99. Now, please don't think that I have, okay. No, then that is much lesser. So now here it is showing up as 99 lakhs as the amount of money that I can actually borrow. So we've extended this, right? My portfolio.
Are you sharing something?
Are you sharing something?
Sorry, sir. That was really quick. Give me a second. Sorry, my bad. Okay, I'll share my screen. And you all should be able to see the Volt's platform here. Is that visible?
Yeah.
Okay. So as you can see here, I've got my total portfolio pledged at 50 lakh rupees. Why 50 lakh rupees? Because I was looking at getting about 22 odd lakhs, which is the down payment I needed for paying to the bank. Now, did I have this money? The answer is absolutely yes. if I paid this entire money, how much would I had saved up on loans? I would, sorry, Shruti, can you please mute your line for me? Thank you. So if I had this money and I paid this entirely to the bank, now nothing happens. I don't have to pay any interest, but I've chosen to take a loan against my holdings. Being a business owner, what has happened is I have used this money of 20 lakhs, borrowed at 10%. This entire interest will be claimed, or I can offset this against my income as used for building up a business. Is this making sense? Now you'll say, Sharath, okay, if you borrow, then you have to go about paying it because every month you have to pay these EMIs. Absolutely. Absolutely. And then I know my numbers. How much is it at 1 lakh rupees? About 900 bucks. So take it 1000 rupees for easy calculation. 20 lakhs into 1000. That is roughly about 20,000. Is that an EMI that I can manage? Absolutely yes. Now the question is, Sharath, at 20,000, you might as well put this money in an SIP. Why would you actually go about borrowing? Because I know if I put the money in lump sum over the next 5 years or 7 years, I will make better returns than SIP. Is this making sense? So it is not just like how Kapil mentioned that we take this only so that we prevent redemptions. Even when you have large lump sum monies, like for example, some of y'all, when you all were purchasing your car, I mentioned instead of buying the car cash down, right? Borrow against your mutual fund. Put the lump sum money over the next 5 years. I mean, how many of you all have been investing in any kind of funds for last 5 years continuously? And you've seen your returns less than 15%. Impossible, cannot happen. Correct? If you stayed invested throughout, unless the fund has been extremely poor, which I don't think has been the case so far, but you will see at least a 15% CAGR. Where I'm getting at with that is, if your borrowing is at 10.5%, growth is at 15%, you're making an extra 4.5%. Is this making sense? Okay, guys, this is way too much of silence. I just see the folks who are sharing a video with some, acknowledgement. The rest of them, I don't know what's happening. So can we have some conversations going on, please?
Makes sense, Sharath.
All right.
Sharath,
Okay.
just want to understand what is the repayment schedule. Sorry if I missed out that. The repayment
schedule is a monthly thing. So like Kapil mentioned on that slide, whenever we go about borrowing, your prepayment starts from the following month.
Okay.
You can go about closing your loan whenever you feel like, without any pre-closure charges or without any penalty, nothing of that sort. So there is no other charges than the charges that Kapil has shown on the website, which is 499 rupees setup, 499 annual maintenance plus GST.
Okay.
Plus GST. Other than that, there is no hidden charges whatsoever.
Okay.
This 10.5%, what is the interest rate right now, is the interest rate because of the current lending rates in the market. If the lending rates go up, needless to mention, the lending rates for Volt also will go up. And if the lending rates go down, needless to mention, again, the lending rates will go down as well.
Got it.
Is that correct, Kapil?
Correct.
I just wanted to get that to be known to the audience from you, instead of just me saying, then tomorrow say, Kapil will say, no, I didn't say this. All righty. Anything?
Sharath, I have one question. So
Yes,
in your
Nirupama.
case, since you were trying to buy a building, so you have a collateral that you can give the bank and raise the loan that you need, no?
I got it because of my credit score. Not with Volt. Not with Volt.
No. I'm telling, because Volt is 10.49%, whereas if you had
That's
gone
right.
to a bank, your lending rate would have been lower, I'm guessing. But yes, there is processing fee and all those things added, but I'm thinking it might still have been a lower EMI.
No, I think, Nirupama, sorry if I've added to this. Let's understand something. I've bought this entire property under a commercial loan. Is that correct?
Okay.
The 80% or the 65% or 75%, whatever is the loan amount for the property, that is going through a commercial loan or a home loan, residential loan. You take it that way.
Okay.
Then I have to pay a down payment for the registration and all of that, right? That money is also something that is mine.
Okay,
that
got
money
it.
is liquid.
Yeah.
Now, imagine we just did the Samco Zenefo recently, right? We just had a call and we've gone about investing. For all of us who've invested in the past in Zenefo or Samco, we know what's the returns. We are in the 36%. right? We are investing in a few dynamic asset allocation funds. The returns are around 12 to 14%. Now, in my head, I'm thinking, I'm not taking for the 1 year because I know next 1 year, 2 years will be volatile in the short term, irrespective of what has happened in the last 1 year, right? Or last 2 years. I'm looking at this for the next 5 years. In 5 years, every year, if I'm paying 10.5% interest, and if I'm keeping this in a relatively conservative fund and not a 100% equity fund, I know I will make anywhere in the neighborhood of 12 to 15%.
Got it. Now I understood. Yeah.
Is this
Okay.
making sense?
Yeah,
So
yeah.
instead of paying the money that I had in cash,
Got it.
when I'm saying cash, people, this is not black money. This is white money. But this is in my savings account, right? Instead of withdrawing this and then paying this off as a complete expense, I chose to go about investing that and then using the Volt's money as a money to go about paying this. So I didn't even place any redemptions. So we're not getting to this situation where Kapil was speaking in terms of, avoiding redemption. Here I have the money already. And this would be the case for all of you, and including all salaried folks. If you're planning to buy a car, if you're planning to go on those vacations that come in anywhere in the neighborhood of 5 lakhs, 10 lakhs, and for, let me see, for a couple of you around the 12, 15 lakhs as well. These are things that you can easily go about funding right ahead in time. Your bonuses come in. Make sure that you're keeping this money not touched for that period of time. This corpus, 50% will go about funding your expenses as and when it happens. Now, when you have to go about paying, instead of bumping up your SIPs, pay that SIP money towards your EMI for the money that we have borrowed against our mutual funds. Is this making sense?
Yeah. Sharath, one more point.
Yes,
Sorry.
yes, please.
So just want to understand, as we are just saying, on a 1 lakh rupee with 10.49%, it's average 1,000 rupees per month as a interest. But what is the principal payment and what is the duration actually Volt is looking at? Because that primarily differs the EMI component which you actually said.
Question. So, Sandeep, by default, the repayment here is 1. It's 1 year.
Okay.
So you're borrowing it for 12 months. Like when you are borrowing a personal loan, you generally have a 36 months or a 50 months or whatever it is.
That's what
this is for 12 months. We can go about extending it for as long as you can, as long as you are in a position to maintain that 50% margin, number one, and you're able to pay your EMIs on time.
No, that's what I'm saying. Primarily, when we say EMI, right? See, there are two ways of people making the payment. One, I'll on a regularly basis, I'll be paying only the interest and lump sum, like in the actual amount which I took, I'll be paying it once. See, that is a typical lending process. What happens in the market?
Your EMI is going to be a mix of principal and the
plus
interest cost.
exactly. So when
Isn't
we say
that correct?
Plus this,
So let me take a second, Sandeep. Basically, 90% of the loans that you see in the market are term loans. Term loans have a fixed structure. Let's say you have taken 1 lakh rupees for 12 months. You're paying 8,000 plus some interest fixed EMI for that 12 months to pay that 1 lakh, let's say, plus 10,000 rupees of interest. However, but that is fixed. Every month you have to pay that 8-9,000. If you do not have it, you'll bounce and your CIBIL will be impacted. Here in this case, what the benefit is, interest only EMI is compulsory. Principal is up to you whenever you want to pay. Okay, what this means is you have withdrawn, let's say, 1 lakh rupees, right? How we calculate interest is we see at the end of the day, what is the outstanding balance for a customer? Let's say it's 1 lakh. I do 1 lakh into 10.49% divided by 365. That is my 1 day's interest.
Right.
If you've taken it for, let's say, 30 days, at the end of the month, I sum it up and that becomes your interest, which is what Sharath is saying is approximately, let's say, 860, 870 rupees. For ease of computation, 1,000 rupees.
Right.
Now, at the end of the month, this interest accrued becomes due and we inform you by a WhatsApp and SMS that this is your interest due. You can see it in the app. This minimum due interest is the amount that you have to mandatorily pay. Principal that 1 lakh rupees, you can choose whenever you want to pay. Now, let's say next month, you paid this 1,000 rupees. Next month, on 10th of the month, you paid back 30,000 rupees.
Yeah, understood.
From next year onwards, your interest will be calculated only on 70,000. Even if and there's no minimum repayment also. If you can pay 100 rupees also or 500 also.
Okay.
The moment you pay that,
because
next day,
now understood. Because the outside lending system and the banking are actually quite different. So that is why I'm just asking. Because in the banks, when you define an EMI, the EMI is the mandate amount which we have to pay.
Correct, correct.
So in
यहाँ पे
outside,
आपको
actually, it's different. Like, as you just said, like, it's only the interest is what mandatory we are supposed to pay. So
yes, हाँ.
it
तो
runs on the same lines.
तो अगर आप जो if you compare 1,000 minimum amount is 1 lakh rupees, minimum is just approximately 1,000 a month, a month, compared to let's say term loan that becomes around 8-9,000. So the
Right.
chances of you having 1,000 in your account, I'm assuming everyone has it. So
Got it.
Lovely question, Sandeep, and thanks for the clarification, Kapil. Mega or Nakul, I think one of you are you've got your hand up. So is that for a question or is that just for an acknowledgement?
This is Girish. I have a question. I have raised. Hi,
So
sir.
Girish, please turn on your video.
Yeah, hi. Just a minute.
Hi. Good
Can you see
morning.
me? Yeah.
Yes, yes. Thank you very much.
So I just want to consider one use case scenario. Let us consider we have to buy a car and cost of the car is 20 lakhs. And imagine
Isn't the budget gone up? Sorry.
And I have 20 lakhs money parked in my saving account. So I am earning 4% on that. But now I have option of buying this car on loan. But if I buy car on loan, then I will have to pay, say, 11%, 12%. Now, idea of this whole thing is even if we want to buy a car, but still we want to earn something through the new scheme, right? Because we want to take loan against our equity, right? So one thing is I can take loan against equity, but market situation could be different. But because I know the 20 lakhs, I have it. So can we start a new 20 lakh investment at that point of time, considering the market situation without disturbing our existing portfolio, and still consider that whatever 10.9 or whatever rate of interest Volt is charging. But in that case also, even if we take a loan from them, still we earn at least 4 to 5% on that.
So let me see if I've understood your question correctly, Girish. What you're saying is, Sharath, let's say if Volt was not there, if this option of borrowing against a mutual fund was not there, what you would have done is you have the liquid money, that money is earning you 4%. Instead of borrowing for a car loan, which is right now probably at 9%, 10%, whatever that story is, I don't want to end up paying this. I will go about clearing because I don't want a headache of having an EMI. I'll go out buy the car cash down. And after that, I begin saving whatever it is. But alternatively, what I can do is I take this 10 lakhs, put it in 1 or 2 mutual funds, whatever it is, and it's giving me 12% return. And then I continue paying my EMI through a car loan. Is my understanding correct so far?
No, I will take a loan from Volt only, but
right.
Volt would need 2 times of the cost of the car, right?
Why do you say that?
No, because they offer only 50% of the mutual fund. If I want to start a new investment, considering the market situation, I am not considering the mutual
so the point is, Girish. No. You should not even. So that okay. Now I get it. So first of all, I think I spoke about my example a little too early. We should not be looking at that. Dekhiye, what you're going to be doing with your investment, right? You are comparing this only with the money that you currently have. Forget the liquidity that you have.
Okay.
Is this making sense?
Yeah.
Now we have a choice. I can either take a car loan. I can either pay this in cash. I can pay this cash down, or I can choose to borrow against my mutual fund holding.
Yes.
If you're borrowing against your mutual fund holding, I need you to forget that 50% thing. You should have minimum. You should be looking at only 25% of your eligible amount.
Okay.
So if this is a 20 lakh purchase that you're looking at doing, I would expect you to have at least 80 lakhs worth of portfolio.
Okay.
If you don't have it, then don't even consider it.
Okay.
Because you're trying to be extremely safe in case tomorrow, because nobody knows when the markets will correct, if it is to correct. And if it's going to correct, we don't know how long it's going to correct for and how long will the correction last for, or how long will it take for it to recover. None of us are aware. But if you're talking 25% only, which means you're expecting the market to correct 75%, which has not happened till now. That's how we're being extra cautious. This is clear so far?
Yeah, sure. Yeah, clear.
This is the ideal use case scenario of loan against securities. What I mentioned was being extra aggressive because of my risk appetite that I'm comfortable with. I borrowed when I didn't need to borrow, not that I wanted to borrow.
Yeah.
Is this making sense?
Yeah,
So
correct.
अगर आपके पास already पैसे हैं, then your choice of, whether you should borrow or not is something that you got to decide. And just like you and I are talking about, I mean, the example that I just gave a little while back, you've been in the markets now for the X period of time. Are you comfortable saying that, hey, I'm getting 4% guaranteed. If I take this money out and pay the bank out, buy my car cash down, I'm not going to be paying any interest, 8%, 9%, 11%, whatever that story is. But if I take this, invest this money at 10, 12, 15%, and I can borrow against my larger mutual fund holding, not this liquid money, right? Then are you comfortable to hold this on for the next 5 years?
Yes.
Whether you'll keep it for next 5 years or not, that's a different story, because
Yeah,
how
yeah.
have we looked at funding for our expenses? I mean, all of us, right? What we've been doing, the bonus is generally used for out-of-pocket expenses, repairs of home, anything that we are not planning through our regular SIPs that's happening on a month-on-month basis. So career upskilling, any kind of home improvement, if you're planning to have a vacation, or any kind of out-pocket expenses that we've not thought of, that can be funded in. Just like what Kapil mentioned, that you can pay a capital, you can pay the lump sum money after some period of time. It is that your EMI, your interest component needs to be paid. So even if you're taking a 25 lakh investment, and from easy, simple math, if you're doing 1,000 rupees per lakh, you're talking about 25,000 being your EMI. Is that something that you can manage to do? The answer is absolutely yes. 3 years, 4 years later, let's say this capital of yours is growing at 15% or 16%. And now you're saying, hey, you know what? Enough. I do not want to borrow anymore. I'll close this loan. Sell the mutual funds, pay the capital gains taxes, and close this. Whichever way, you will still be up by 3 to 4% over and above after the loans that you've borrowed or the interest that you've paid.
Correct. Got it.
Did that make sense, Krish?
Yeah. Correct.
Kapil, would you want to add anything that I missed out over here?
No, that's correct. Sharath, in case I believe generally the leveraging part, do you want me to take the IPO example? Because even though
No IPO, no. That is, I think IPO is really crazy. Let's not even get there, because I tell my audience, IPOs, if you are really keen about this, then अपने को मिलेगा कितना as a retail investor? Maximum you will get is how much? आप 2 लाख invest करने के बाद, it's a lottery system, right? Maximum how much you will get. I do not know anybody who's made more than 2 lots.
Correct.
और वो 2 lot के हिसाब से, even if you make 100% return on a 30,000, it's an extra 30,000. For most people, it's a weekend outing. I mean, it's not even worth trying to do all that circus. So we'll not even get there. Sorry. Okay, Kavita, I think
Ganesh here. Ganesh here.
one second, Ganesh. I have a couple of people who already raised their hands. Kavita, you can unmute your line and ask the question in case.
Mika has a question in the chat. Just
Kavita, was that
Okay,
question?
I'm okay to wait if.
No, please go ahead.
Okay.
I'm keeping that.
So, very quick question then. Two things, right? One is, I think this is understood. In principle, what we are trying to do is take money from someone who is charging us less interest and invest it in an area where you get more interest.
Absolutely.
The difference is your profit without investing any of your money, right? So that's the principle. Now, what I am looking at is this is an interest that I'm paying on borrowed money. Can it be shown as a loss, and can we have some tax benefit? Is there a provision?
No. Okay. So please understand, there are 2 types of tax calculation, right? One is your income tax, which is based on your salary slab. Okay. And then there is another tax, which is your capital gains, which is on equities. Clear so far? Okay. You cannot offset your borrowings on capital gains. You cannot do that. So capital gains here, if you made capital gains 15% and here you made 10%, the extra 5% itself is your arbitrage. You don't have anything over and above that. You can't.
I did not make 10%. I paid that as interest, so it is a loss. So
no, it is not. It is not a loss. It is an interest you're paying. It is not a loss. If you booked losses, then you can offset losses against gains. But you can.
What I'm looking at is if I have a home loan, on the interest of that I get some tax benefit. Is there a tax benefit on this?
No, there is none. There is none. There is none.
Okay.
However, you bring out a very important question. Anybody getting some ideas right now? I mentioned that you cannot claim gains.
Actually, this interest we can claim as an expense from our business.
For business, don't do this, no, Sandeep. 80% of the people on this call are salaried. They'll say, then we'll have a, we'll have a, what is that thing called, rivalry against salaried and self-employed folks.
Not rivalry. Jealousy is the right word, right? Because salaried people
I
will
didn't
not
want to
be
say
able
that.
to.
You said that, Kavita. But
Yes.
anyways, let me. So, folks,
But is there a
all of
way
us,
for salaried people?
I will tell you how I'm planning. So these are all the different ways that I'm planning to do it. One, I've already told you all. Second thing, do we all know that there is a company called Better Invest where we are putting our monies? Do we know what is the interest that we're getting with Better Invest? 16 and a half, 17%. Is that correct?
Right.
Now watch this. 10% is your borrowing cost. It's an interest. 17% or 16% is your income, not your gain. Is that correct?
Yeah.
This minus this is how much? 6%.
6%.
So you're getting 6% on borrowed money. Money that you didn't, money that was yours, but technically not yours. Is this making sense? Now you'll say, Sharath, for 6%, do we need to do so much of headache? I mean, if you can keep it for 6% in the money in the FD, then again, it's a choice. I am choosing to do so. Right? We've exited, I think, out of 4 or 5 deals with Better Invest so far. And even at 15%, it is giving you an extra 5.5% for just keeping the money. Why not consider it? This is me. I'm not saying that you must. I'm just saying that there is a choice that you could do it, right? So once again, please understand, the taxation is very important. And if you're planning your returns by yourself, you'll please understand how to file your ITRs really well, or get hold of someone who understands taxation really well, not just filing your returns for the sake of filing returns. Now, this could be even better if you're doing these investments in the name of someone who is not in the highest tax slab. Now your taxes come down even further. Is this making sense? So please be very mindful of this. Every small thing, I mean, you can consider, an extra 4%. Now imagine today we are playing with a couple of tens of lakhs. But tomorrow, if your portfolio starts getting the 2 crores, the 3 crores, and you're doing this over a 3 crore or a 4 crore number, how much is an extra 4% for absolutely no effort of yours? Right? So this is the second use case scenario. Third use case scenario, anybody would like to take a guess? Anyone? You can unmute your line. How many of you have been taking a recent risk profile questionnaire, in that there's a question that says, in case the markets were to correct by 30 to 35%, what are you most likely to do? And there's an option that says, invest more when the markets are down. Is that correct?
Right.
Now,
Absolutely.
I was planning to do this in the 2020, but like what Kapil said, that time the vendor that I was looking was at Stancy. And with them, the minimum holding, the paperwork itself was taking 2 months. And apart from that being 2 months, it was completely offline. It was not digitized like how it is right now. My entire loan of this 20 odd lakhs was dispersed in less than 15 minutes, start to finish. From registration to disbursement was done within 15 minutes. So the idea is, if you already keep an overdraft ready for yourself, not that you're using, please understand the only amount of money that you will pay is the 499 rupees for registration. Once you set up the overdraft for you, you pay interest only when you borrowed the money. So now let's assume everyone's portfolio is at 1 CR. Markets have corrected by 30%. Now your portfolio comes down to 70 lakh. On 70 lakh, how much are we going to be borrowing if you're choosing to do that?
Somewhere around
25
lakhs.
Yeah, about 18 lakhs.
25% of 75 lakhs.
75
of 70 lakhs, right? Borrow
So 20
that,
lakhs.
invest. All of us have been in the markets for a while now, and we know for a fact, again, please understand, this is a high risk strategy. High risk comes because we do not know of things, or because it is very volatile. Over a 5-year, over a 7-year period, I'm still yet to see the markets not having given returns when you're looking at it from a rolling return basis. All clear so far? This is high risk. I'm emphasizing it again, but if you plan this out clearly, stay put. For some of us, when we saw our portfolios during the COVID time losing 40% all of a sudden our portfolios went as backdated as 2015, 2014 values. And all we had to do was stay put for 6 months time. Everything rebounded like nothing happened. And another 6 months time, we ended up being 50% higher from the previous high. So when you're borrowing, keep in mind 5 years, always. 5 years. Now, can you close your loan before that and you can book your 20, 30, 40%? Absolutely, yes. But idea is stay long-term focused. These are the 3 use case scenarios I'm talking about in terms of when you have money and you don't need to borrow. We are borrowing just to be extremely smart. You look at any of your today's large-scale entrepreneurs, whether it's the Adani, whether it's the Ambanis, money is made from borrowing and not necessarily only first from saving, making that money grow, and then waiting to make another investment. Debt is not bad. What you do with debt and how the interest rates play, that defines whether debt is bad or good. All right. So, Sridhar, I see you raise your hand as well. You can unmute your line and ask the question, please. You need to unmute your line, Sridhar. Your line is muted.
No, I just wanted to understand where are we going to invest this? Better invest or IPV or where?
Oh, no. Okay, Sarji. Oh, thank you for asking. IPV doesn't even come into this equation. IPV is not, okay. When I'm borrowing, I'm looking at putting the money back into mutual funds itself. Why?
Because it has higher returns.
No. The stability of
My
our
loan eligibility will increase even further, no?
Yes. Yeah.
Apart from the fact it is a regulated product, apart from the fact we know the dynamics of how it works, right? If you're putting something like an IPV, you do not know when the exit. When are you going to pull your money out? You don't have the exit. The liquidity is not defined. Therefore, we'll be putting our money back into a mutual fund, open-ended fund, and preferably it will not be in your small caps and things of that sort. I'm looking at mostly the dynamic asset allocation funds. So then we don't even have to worry about market timings. Again, depending on the amount pulled out, it will all differ. I'm just giving you a rule of thumb here. First, depending on the volume of money you pulled out from situation to situation, you'll decide where the money is going to go. But as an asset class, it's going to get back to mutual funds. Did that help, Sridhar? Show me a thumbs. Okay, great. Ganesh, you would also ask for a question.
See, when we borrow,
turn your video on. I'm not going to.
See, when we borrow, okay. Is this the repayment period? See, sorry, I joined a little late. Okay.
That's okay.
So is the repayment period is only 1 year or it is more than that?
Who would like to answer that? Anybody?
One. That's before somebody attempts. Then you said that why will be selling happening to recover that money, right? That selling, who has the control? Is it the Volt as the control or as an individual, I have to sell and then settle that loan?
Okay, so there are 2 questions asked. Let's address the first question. Because we've already answered the first question. Anybody like to share your response with Ganesh?
Yeah, the tenure is 1 year, but you can extend it for however long.
Yes, you can extend it for however long you want, Ganesh. Okay, so that is answer number 1.
So until such period, I have to pay the basic interest amount, whatever is
That's correct.
that.
That's correct. But please remember, your interest rate is fixed. And it changes depending on the borrowing rates, which will be told to you in an email.
It's a floating interest rate.
Correct. Now, as far as answering the second part of your question, Ganesh, in terms of who does this, please remember your mutual funds are given as a collateral to the lending partners out here, which could either be Bajaj or Tata Capital. Okay. Basis that these are the people who are, from my understanding, these are the guys who are going to be clearing out your units to fund the amount of the margin that is required. Kapil, do you want to add anything that I've missed out over here?
No, Sharath, I think mostly. If you want, I can go through the example of there and the interest rate calculation also.
Let's do that towards the end.
And I have a continuity of the same question.
One second. Let's finish 1 second.
Me too.
All right. So, Ganesh, to answer this, Volt is playing the role of a platform aggregator. Okay. The more important question is what happens in case Volt doesn't, because Volt is a startup, right? So I'll allow Kapil to answer that in just a bit. But please understand, Volt is facilitating this. It's a platform that is democratizing something that was only meant for the ultra HNIs when you are talking about a 5 crore, a 10 crore loan against security. Here, because it is us, numbers are, but there are so many other people who are not looking at, with portfolios as small as 50,000 or 1 lakh rupees in borrowing, because they are borrowing to avoid redemptions. So the main purpose of Volt as a company is to prevent redemptions, which saves the investor two benefits: tax and the fact of your compounding for the future.
Yes.
Right? So was I able to help you with that, Ganesh?
Yeah, this borrowing amount is treated as an income, right? And then the income tax laws apply.
No. How is the borrowing income? You are borrowing. It's like your home loan, right? You borrowed for your home. Here, you are borrowing against your mutual fund. You can choose to do whatever you want to do with the money.
Okay.
Right? It's just like a personal loan. Why would you take a personal loan? You can take it and do whatever you want. Nobody is stopping you to either use that money for your higher education, for a vacation, to buy a car, whatever it is. Right?
No, that's right. See, how I spend it's my wish, okay?
Correct.
But suddenly it has come into my account and it will be treated as an income for that year, right? So my income tax, I will be in the income tax slabs for that amount, right?
How is that? That's not, the money is come to you. See, is it an income? Is it earned out of salary?
No.
Someone has transferred money to your account. Okay, your family, friend, whatever it is, have transferred money to your account. You will be paying income taxes on that only if this money is, I don't know if I'm giving you the right example here. Money coming in from, okay, insurance. If you claim an insurance and the money comes to your account, will you be paying taxes on it?
No.
Same goes with loans as well. Whenever you borrow, now for a home loan, by that logic, the money is coming to you, right? You're getting the money first to you, and then it's going to your debtor. For that, you're not getting the loan. When you take out a personal loan, when you borrow in your purse, the money that comes from the banker to your bank account, there's no income tax on it, right?
Hey, Sharath, Nakul here. Can you hear me now?
Yes, Nakul, I can.
Thank you. Sorry, there was something wrong. I have only 3 questions. So I understand
Only
only 3 years after others have asked most of them. So I understand it's a credit line. You take the money, you do whatever you want. First, I understood there is no individual tax benefit. There is no tax benefit on the principal or the interest you are paying, right? The second is what you are saying is how you deploy the money is what will give you the gain. So my question was, your strategy is for wealth generation with the borrowed money, or is it expenses or operational, or I'm talking individuals, not business, expenses strategy for the borrowed money? What is the strategy that you are thinking? Wealth generation or expenses?
What do you think, Nakul? Because I like the way you're thinking, and this question is very instead of me giving out the answer, I'd like to know from you. What do you think?
No, I am looking for if I can use the borrowed money for my expenses while the collateral I have used can continue for wealth generation. That's the thought process I had. But
you can do it for both, no, Nakul. Now, let's say loan against securities was not available, okay? And we are doing a long-term goal, long-term planning of a financial goal. Let's say buying of a car, okay? Gaadi abhi 7 saal ke baad aane wali hai. Now at 7 years, do we put our money in debt funds or do we put it in equity funds? Mostly large and mid cap, correct? No? Is that right?
Yeah.
Now, over the next, what have we said? Every time that your goals are coming in more closer to the deadline, you would want to go about transferring some portion of your money from equity to debt. Why? Because you want to protect your capital and don't want to have that corpus being exposed to the volatility of the market.
Sorry, Sharath, to interrupt you. I'm not looking to buy a car. I'm looking at an expense of my current monthly rent. How can I use this for my
No. Sorry, no.
Because
it is not meant for cash flow issues.
It's not cash flow. I have the corpus.
I have the cash flow to pay the interest, and then I want to use it to for my operating expenses as an individual. That's the use case I'm thinking of.
Give me numbers, Nakul, because I'm not quite able to follow that.
Let's say I'm living in an apartment which is 50,000 or 50,000 rent. I'm just taking numbers. Sorry, I don't know the exact right
That's
now.
okay.
50,000 rent. So if I have a corpus of mutual funds which can give me a credit line from which I can pick up 50,000 as a amount, and usme I can use that as a against that, right? So I have a bigger corpus with which I can do my monthly expenses, whether it's groceries, whether it's electricity, whether it's this, all my monthly expenses. I understand there's no tax side of it, benefit side.
No, that is bad. So we are borrowing to live. See, while you can do that, it's a very aggressive proposition, and it's not something that I would recommend for more reasons than one. See, the idea of doing this is to get this extra little kicker of 3, 5, 6%. But having to put your monthly expenses borrowed from this and then use, because ultimately aapka EMIs, you have to go about clearing this loan. Isn't that correct?
Yeah.
Sooner or later, you'll have to go about clearing the loan. Now, what for your bad luck if the market tanks? Abhi tak, the recovery has been very smooth and everything of that sort. And after that, if there is a problem in the job, on the job front, so don't use this to solve cash flow problems. When I'm saying cash flow, what does cash flow mean? Any kind of outflow that is happening on a monthly, quarterly basis.
Okay.
I'm talking
I'm looking at using the same cash flow to live a more luxurious life. That's what I'm looking.
You will. Mera dhanda to aap band karoge. Anyways, sorry, but the point
third
is
question.
No.
Only the third question. I understand what you're saying. Third question.
Nakul, one second. I'll take the third question. So everybody on this call, 1 second, because of Nakul pointing this out, please understand, we are not using this to solve your monthly expenses. It is a large outflow of money that you would either fund it to borrowing from a loan like a personal loan or home loan or a home improvement loan, or if you are looking at upskilling, it should be education or whatever it is for that matter. These large expenses which we would otherwise fund from our liquidity or by selling off your mutual funds or any kind of investments, you're looking at replacing that. Is that clear, everybody? Okay, great. Nakul, third question.
Third, I saw the mutual funds. Is this against secured bonds, government bonds, 54 EC bonds? Is this against that as well?
Kapil, do you want to answer that?
So Nakul, at the moment, it is again mutual funds.
Only.
Another product, other financial assets will be coming in future.
Okay, understand, sir. Thank you.
All right, Sandeep, you have been having your hands up for long. Please unmute your line.
Actually, I noted it, thinking I'll forget it. Okay. So one thing is, Kapil, actually, as you said, now let's say we kept a 10 lakh portfolio to you, as a collateral, and then we are taking 10 lakhs from it. Okay. And as Sharath said, basically looking at the market situation, and let's say let the portfolio drops. Now the Tata or the other party, whoever has a control, they are going to sell this particular mutual funds to match the portfolio, the thing, right?
Margin amount, the margin amount of 50%.
Margin amount. So in this, just want to know, will they give any grace period? For example, or that will be just, or if they are doing it on what lines, on what timelines that they will be doing it. I mean, how they will be evaluate, an end of the month evaluation or everyday evaluation. I don't know. But or if that is the case,
I hope you're not planning to go all out on this one, Sandeep. We'll have
no,
to talk about this, but Kapil, please answer
but
that.
I'm just asking this scenario because I'm just trying to compare these things, obviously with a outside lending concept, Sharath. Because that, I mean, my questions are or is it with regards to banks, the way we lend with the banks and other things, right?
I don't have an answer, so let's wait for Kapil to answer that. Kapil, could you?
Sure. Should I take through the margin call slide? I believe I'll not.
Sure. Do that.
So it's a very good question, essentially. So we really have a slide to explain what is margin call. It's very
Okay.
common in terms of loan and securities. And how does it work, and why Sharat's recommendation of 25% makes sense, especially when you're leveraging, right? So margin call is essentially, this is a secured loan, right? So you're giving me a security, in this case, which is mutual funds, and you're pledging that, and you're taking a credit line against it, which you can borrow anytime, withdraw anytime. Okay. Now, what is the value of that I have from your side is the value of the security that you give me. If you take of the longest time of loan against security, gold loan. What is gold loan? You have gold, you give it as a pledging, girvi rakh diya simple, and you take a loan against it, right? If the value of gold tanks, I'm taking it as collateral, so I'll come back and say the value of the gold was 100, now it's 50, give me back X amount as per the ratio, right? So that was gold, it was illiquid and other things. In terms of mutual funds, it is fairly simple. The value of the mutual fund unit is known, publicly known, what is the value of the unit. It is calculated on a daily basis, and the pledging and handling part is very digital. Okay. What happens here is RBI says, I'm taking an example of equity mutual fund because the value is basically moving every day, right? So you're taking, let's say, 1 lakh rupees of mutual funds and pledging and taking a limit of 50,000. Now, why 50,000? Because RBI says 50% is max limit you can give on an equity mutual fund. So 50% of 1 lakh is 50,000, and they say this ratio should be maintained. The maximum withdrawable limit should be 50% of the present value of mutual funds pledged. If you're pledging 1 lakh, it's 50,000. If that value increases to 1 lakh 10,000, this becomes 55. If it reduces to 90,000, this becomes 45,000. That is the simple criteria. Now, let's say you have pledged 1 lakh rupees, set up a limit of 50,000, withdrawn 50,000, 100% you have withdrawn. Okay. Now, what happens is, let's say the market comes down by 10%, which is 90,000. Okay. Maximum withdrawable limit should be 50% of latest value, which is 50% of 90,000 becomes 45,000. Current loan amount is 50,000. So there's a 5,000 gap. This 5,000 is the shortfall amount, and a shortfall is triggered. Whenever a shortfall is triggered, you will be able to see in the app, you will receive a message from the lender and from us also. So there will be clear clarity in terms of there's a shortfall. Now, what happens when there's a shortfall is happening? First thing, it's not like the shortfall happens, we sell the security instantly, right? So when a shortfall happens, we give 7 days to regularize the shortfall.
Okay.
Regularizing meaning meeting the shortfall. Now, how can you meet the shortfall? Basically, there are two ways to meet that shortfall. First is you pay that 5,000 rupees in terms of cash to the account. When you paid it back, your loan amount becomes from 50,000 to 45,000. Security value is 90,000. The shortfall meets, there is no shortfall happening. You're okay, good to go, right? If the market falls further, then there's a new shortfall coming down. If it goes up, then the shortfall also goes away. The other way is if you have mutual funds, you can pledge them also. So if you have 10,000 rupees of mutual fund, you pledge additional 10,000 rupees, 90 plus 10 becomes 1 lakh, your outstanding loan value is 50,000, the 50% ratio is maintained, your shortfall goes away. That is it.
Okay.
So these are
So,
the ways to meet
yeah,
shortfall.
so the grace period is what I understood.
7 days.
Kapil. So that is, yeah, 7 days. So that is one important thing. And the second thing is, now, as you said, the shortfall identification, right? So is that going to happen on a daily basis, or how is it?
Yes, yes. So since value of the mutual fund unit is available daily basis, this is happened on a daily basis. So one of the things that happens is, let's say there's a shortfall. So I've taken a very big example. Generally, what happens is if you've taken 50,000, this 1 lakh becomes 99,000. A lot of times during the shortfall, the market goes up and this becomes 1 lakh 500. So your shortfall automatically goes away.
Okay.
So that is the idea. In one very specific extreme scenario, if this ratio becomes less than 85%, then we have the right to basically not wait for 7 days and we sell it directly. But that 15% fall is a very big fall in terms of mutual funds. More relevant to shares, I believe Sharath can tell better because shares are much more volatile.
So in those scenarios also, like, that's what I'm saying. Like, can it be communicated and figure out alternative before even selling them?
Yes, yes, yes. So
I understand they have the complete control of selling it, but still, like, if there is an option saying that, okay, hey, like, we are going to sell it out, and do you have an alternative actually to fix it? You can fix it.
Yes,
if
yes,
not
yes.
7 days, it can be 2 days as well. But you know?
100%. Yeah. So in all the cases, the first attempt, and it is regulatory required also, the first attempt is to inform the customer about the shortfall and ask him if he wants to regularize it and give him
Okay.
ample time period. Right.
Okay.
If he is shortfalling, then I don't need to sell it because frankly, meeting the shortfall by selling mutual funds is an additional operational expense from my side also. Plus, it's not good for the customer. So
Yes.
that's why when Sharath says, so just to explain one thing and why Sharath's point of 25% or 30% is very important is to go away with smaller margin calls of 1%, 2%, 500 rupees. What we do is we give upfront 45% only. So what
Okay.
this will help you is if your portfolio drops 10% only, which is it will become from 1 lakh to 90,000. And if you use 45,000, then only you will have the first hint of shortfall. So for daily triggers, you will not have a shortfall. And this is what we have put it from our side. If someone wants to increase this, we are happy to increase it to 50%. But it's better to put a cushion of 5%. And I genuinely agree with the cases that Sharath is suggesting. If you have a cushion of 20%, 25%, that is better because then a market or a portfolio fall of 30% is very rare, right? Apart from COVID, which is 1 in 100 scenario, is speaking in terms of financial language, that's a very, very rare scenario, right? Generally, market portfolio fluctuation would be in the order of 10% at the most, generally, in terms of mutual funds, especially. So this
Thank
is
you.
something that I wanted to take upon. Any questions on this specific point?
So
What if the market goes up and the pledged value is released? Say, for example, 1 lakh. Currently, I take 50,000, right? The loan amount is 50,000. If it goes higher than that, okay, then the margin value, right? Current value is more than that, but whatever the loan I have taken is only 50K, right? Then the margin requirement is like there is no shortfall, it is surplus, right? Whether that surplus is released from the pledged amount or it is what is the scenario then?
So Ganesh, basically, operationally, we are not pledging amount, we are pledging a mutual fund unit.
Yes, that's what I'm saying.
What is happening? I have pledged 1 unit, the value of the unit is going up.
Correct.
So if the value goes up, we do not go and unpledge that unit. It is there.
Okay.
Okay. At the moment, what happens is there are slightly technical, but we in the agreement that you do, it's a digital agreement. There is a sanction limit and there is the value of the pledged mutual fund units. Right? Sanction limit is the max what I can give you and which is signed in the legal agreement.
Okay.
Now, what you can withdraw is the minimum of these two. So if the portfolio value is here, you can withdraw this amount. If the portfolio value is up, you can withdraw this amount only because legally I can't give you more. Specifically in Sharath's case, why you see 99 lakh is Sharath being financially very savvy. We have given him an increased limit. So the value goes up, his withdrawing power goes up, it goes down on a daily basis. But genuinely, I do not see a scenario where it would be useful for general usage from a normal customer perspective. Like it's mostly used by very financially savvy people. Sharath, I think you can touch upon that point.
So Ganesh, and for everybody on this call, there is just a limit that Volt gives. It is there, it's made available. That doesn't mean just because the limit is given, I can go about borrowing. No, it should show me very clearly in terms of how I'm going to be planning, because what I have used is my first availability, which is based on my portfolio value and not based on how much I'm eligible for. So the 90, it's just to avoid the hassle. I have again taken only one side of the portfolio, right? I have not got Shobita's money in, I've not got the company's funds in, so on and so forth. So we are not even getting there. Idea is, if you've borrowed, till the time that you've cleared your loans, the units will still be leaned or will, in this case, will be pledged, irrespective of whatever is the value of the unit. Good so far? And Sandeep, to answer your question a little while earlier that you asked in terms of what happens if, we end up borrowing, if the value goes a little haywire, please understand, every month your SIP is also going in, right? We've not taken, their current condition is like, okay, you only have so much portfolio, nothing is getting added to it.
Correct.
But for everybody,
all that is good, Sharath. My only concern was like, when
notification.
we kept it, exactly, the notification point and the grace period. So those are the points which I was actually trying to stress on.
And see, if we follow these basic, principles, no, Sandeep, I don't see the need of even getting that notification, quite frankly.
Got it. Yeah, absolutely.
When I pulled out, because when I pulled out this money, the markets were a little turbulent. I had the liquidity. I first went about clearing at least another 4 lakh rupees. So I know for a fact this is not going to hurt me.
Correct. Correct.
So
Got
that is that. Now, KK, you can unmute your line and turn on the video and ask your question. Yeah.
I thought you were referring to me.
Sorry, Kavita. I thought no. KK, did you have a question or was that an acknowledgement?
No, I have a question. Are you able to hear me?
I can. Turn on your video, please.
I am not able to. I'm just driving and it's hands-free mode. Sorry, Sharath, I was waiting. So
Are you driving?
Yeah, but it's in a hands-free mode. I can't switch on the video.
Okay, please go ahead.
Okay, I had a couple of questions. So first is, Sharath, when you mentioned about the margin, when you said delta between absolute borrowing and the returns, the net 4%, probably you have factored in the what do you call the tax portion of it also. So net of tax would be 4%, right? Because we would have to, on the sell-off of mutual fund, you will be having capital gains tax versus the interest. So
the capital
net
gains
off would
tax
be
is not, it's not deducted upfront. No, you have to file this return separately when you have to pay these taxes when you're filing ITR.
That's right. But in a bigger scheme, if, for example, if we are paying 10% for interest and you are actually selling it at probably at a gain of 16, 17%, then after that, if you are paying another tax on that, maybe the net gain by this would be around an arbitrage of 4 to 5%. Is that the understanding?
Really, no?
Or
not really? No. Let's put numbers to perspective, right? Let's say I borrowed 10 lakhs. Okay, 10 lakhs at the rate of, let's say I'm still taking 1,000 rupees for the sake of it, so it's easy math, right? How much am I going to be paying extra per month? 10,000 rupees. 10,000 times 12 is 1,20,000 rupees. Is this my cost of borrowing? 1,20,000.
Yes, correct.
10 lakhs has become, let's say, 15% growth. 15% on 10 lakhs is how much? 1,50,000 rupees. Is that correct?
That's right.
1,50,000. So my gain is how much? 50,000 rupees. Sorry, 1,50,000. 1,50,000 minus 10% on 1,50,000 is 15,000 rupees.
Okay.
Net, how much is my gain? 1,20,000 minus 1,35,000 rupees. 15,000 rupees is my gain after considering taxes.
Okay, understood.
Right.
But
now this is considering if you made only 15% in equity gains. But if you stay put for at least 3 to 5 years, 15% is very conservative.
Understood. Okay. So that was one question. The second question is, we talked about the margin based on the value of the mutual funds going down. When is the other criteria in which the Tata or the others will sell this mutual funds? It will be how many months of non-payment of interest, or what is other criteria?
See, good that you asked this question, KK. For everybody on this call, please do not borrow if you are not in this position to even pay the bare. I know none of y'all are in that position, and that's why we are having this conversation. But if it ever happens, please understand every missed EMI is like a check bounce case, and it affects your CIBIL. It affects your CIBIL score. So please do not miss out, irrespective of how busy you are. The intent of doing this is to maximize the opportunity, and not while maximizing the opportunity, we impact or affect other aspects of our finances.
Understood.
To answer your question, KK, there is no reason why there will be any kind of levy unless you pay your basic EMIs. If you do not pay it, I do not know that process, and I don't think you should even consider that, because that thought should not even come in. We are talking about making sure that we clear this.
Understood. So no, that is in case there is for some reason, I do not know if this is going to go through an ECS mandate or how it is, but in case there is a miss out for some reason, I just want to know the repercussion.
Kapil, would you want to answer that? Because at least I didn't think of it on those grounds.
So, what is happening very clearly, basically interest has to pay mandatorily every month. So let's say if you do not pay, let's say the interest is due on 7th of the month, right? Or 2nd of the month, whatever the due date. Automatic mandate presentation happens in most cases, right? And there should be sufficient balance in your account. If you do not have sufficient balance, the presentation bounces, so there is a bounce charge plus there is a penal charge on the interest that is due, right? Then on from 2nd till 15th of the month is when you have time to still clear off the bounce charges and the interest also. If you do not pay it even after 15, then the liquidation of mutual fund units to recover the due amount happens in the next days, and it is also then reported to SEBI. Right. So it is so summarizing, it is mandatory to pay interest every month. Right. Second, even if you miss, you can again regularize by paying the penal charges and the interest amount. Third, if you still do not pay it and you have ample amount of time and enough messages from our side, I'm genuinely telling you there will be no surprise that your mutual funds are being liquidated. So it will be clearly communicated by messaging and everything. Yeah.
Okay, understood. Thanks. Third, just two more questions. Third question is, Sharath, in case we are going with this option, will you actually put it in a specific fund so that we can see, the growth of that fund versus the exposure to the interest, and we ensure that it is positive?
100%. 100. That's the intent, KK. I know you're asking this basis what we're doing for Asset Monk's investment. So
That's right.
yes, I definitely have a plan, but there are a few variables here, KK, because it is not going to be as consistent as it is with Asset Monk. Because what are the variables? The variables could be how much money are we planning to borrow? What did we choose to do it? Because here some of us could choose to borrow this for paying, not paying for the buying the car cash down. Some of us would use it as a replacement for vacations. Some of us would use it to, double down on an investment that has gone, that there is a good opportunity for, or multiple things. So I'm not really quite sure how many funds can we allocate, because we've anyways given a good amount of diversification already. So the answer is yes, that's the intent. But do I have a fund named kept aside for this just as yet? No, I don't, because I do not know the quantum of money that we're talking about. However, there will be a mechanism, or if nothing else, then we will know that, okay, for this folio number, we kept so much of money aside because of loan against securities.
Okay, understood. And the last question is, in case the Tata or the others are going to pledge and then monetize the mutual funds, I hope there will be there'll be a possibility that they will only monetize the ones where our gain is the least, so that the capital gain tax is also lesser, because obviously they'll get it.
It is going to be on random basis. They need so much of money, and I don't know that I don't know how they're going to be, but it's on random, because they will not have a choice. See, the intent for them is to recover their money. How they recover, they will not care. So yes, they could be from your least performing one or the most performing one. It could be completely at random. But I mean, I see the purpose of you asking the question, but we should not even look at borrowing when we get to that level.
Okay.
Right. And even if that happens, KK, you know what I'm planning to do? I mean, glad that you brought this question up. See, you will be mentioning your situation to me, right? If there was something that went really out of whack, you would give me a call and say, okay, Sharath, this is what is happening now. How do we manage the EMI? Then in that case, what we will go is, we will, before anybody else sells, we will only sell the one that is underperforming. Right? So that is that.
Thanks.
Can I help? No, thank you. Good set of questions, KK. Thank you. Where did Kavita go? Kavita, you had a question. Are you still there, Kavita?
Yes, I'm still there. So, Sharath, whatever money we borrow, we invest in the mutual fund. But the logic that we are applying, that it will not only offset the amount of interest that we have borrowed, but it will yield a certain additional thing. But that is assuming the CAGR kicks in right from last year, right? So we need to do this for at least 5 years to be able to get that kind of.
Not really, Kavita.
We're not assuming that the first year the mutual fund is going to give 15% of
No. Your understanding is correct, Kavita, but I'll tell you where we are slightly deviating from the thought process. If we are looking at using the loan against securities to make capital appreciation, you do that only when the markets have corrected at least 15 to 18% and above. You are not doing that when the markets are normal or, at the current levels. Like what we did in the month of June 2022.
So basically, this is only for the one-time investments that we are looking at for NFOs, or maybe
no NFOs. No NFOs. Only
now what are we looking at here?
Only when the markets correct at 20% and above.
Okay, so until then, we stand on OD, is what you're saying.
We just open that limit. We don't use that limit.
Okay.
It's like you opening a locker at the bank. You only start using the locker when you have valuables that you need to store. Till then, you just have the locker facility. You don't use it.
So the processing fees or the maintenance fees for this account remains same even if it is for 50 lakhs or 25 lakhs or 10 lakhs.
That's correct. That's correct.
Okay. Okay.
Thank you for that question. I'm sure. Okay, for everybody on this call, 3 different ways of how we can use loan against securities. Number 1, you borrow at 10%. You invest in an instrument that is giving you fixed set of returns like interest with your FDs, or in this case, better invest, provided that arbitrage is at least 5% so that it is meaningful to do this entire exercise, because after taxes and everything net of it, you are still going to be at a good number because you're getting an extra 5%. Now, for those of you 5% doesn't seem a big deal, ask yourself how much of bonus have you got this year, or how much of an appraisal you've got after working 365 days. After working 365 days, if our appraisal is only at 5%, 10%, whatever that number is, for doing nothing with money that doesn't belong to you, you're making an extra 5% net of taxes, right? So that is if you're going through borrowing against fixed income. If you're borrowing and investing in the markets to get capital gains, you're looking at making your gain should be anywhere in the neighborhood of, again, 15% and upwards. Can we make higher than that? Answer is absolutely yes, but do that when the markets have corrected by 18% and above. Option number 3 is when you have large purchases that you already have the money for, either in the form of savings, or you have money kept aside in mutual funds which you like to pull out. Instead of doing that, use loan against securities, pay the 10.5%, use the money that you have liquid or whatever it is, let it continue to earn the 14, 15, whatever percent that you'll be earning so far, that your portfolio has been earning. Any questions on this one so far? Okay, I'm assuming that's a no. Ram, you have had your hand up for a while. You can unmute your line, turn on your video and ask a question.
Yeah, hi Sharath. I just have one confirmation that I need. So this is only against mutual fund that we talked about, right? Not stocks or any,
No, loan against securities is actually, you can borrow this against any securities that is defined as a security, bond, stocks, corporate FDs, but in Volt's case right now, their entire infrastructure is designed to offer loans only against mutual funds, against your mutual fund holdings. They are working on their infrastructure to make it easier for also to do this with the stocks, ESOPs and all of that. But for now, it is only with mutual funds.
Okay. And the second question is, let's say if we take a credit line against a mutual fund, and God forbid, if something happens to the first party of the mutual fund, right? For example, demise or something.
That's right.
So in that case, how does the settlement happen? Is it the lender who will do the settlement and return the gain, or is it the nominee who has the right to sell the mutual fund and then settle with the lender?
Interesting question. I don't have an answer. Kapil,
So, Sharath, for this specific case, I'll share a write-up also, because it's
okay.
implicated the lender and the nominee. There's an interaction. Right. So I'll share the write-up for you, Krishna.
Is there a question that you had, KK?
Thanks.
No, maybe I'll just keep my hand down. Sorry.
Okay, sure, no problem. So, Kapil, I think we've answered pretty much all the questions. Why don't you
Sharath, one thing actually I just missed out on the ECS part. Actually, someone asked it, but I had to jump into other call. Sorry about that. Just want to know on the ECS, like, do we have a ECS facility actually with Volt, or is it like, we have to pump in the money?
No. The money gets debited straight from your bank account.
Okay. So in that case, again, by default, it's only the interest amount which will be picked up actually from that, and the principal side, it's again optional for us actually whether we have to do it or not.
That's 100. So every time before your money gets debited, right, there will be a note coming to you on an email and including on your WhatsApp that this much amount of money is due and it will be debited from your bank account. Please ensure
Correct.
sufficient funds are there.
Okay. Fine.
Is
Sorry,
that
I
correct?
missed this.
Kapil? Is
Yeah.
that correct?
Yes,
Alright,
yes.
so why don't you do this? Please start sharing your screen on the company's website. Show us how this calculator and everything works so that it becomes easier for all of us in terms of they can also go because this calculator is currently on your website and then they could also go about playing around with it and get some numbers that can help them draw some conclusions.
Sure. So I'll take the audience through two things. First is how to use the Volt Money line. So this is I'm showing it on the laptop, but the exact same thing is available on the Volt Money app also, right? So what you see is what is the available cash since it's a limit and what the outstanding amount. In this specific case, let's say was my colleague Nishant, available is 23,000 and outstanding 710. Now, if I want to withdraw money, I click here. It asks me what is the amount I want to withdraw. I can select 5,000. I can go ahead, confirm. It will trigger an OTP. It will tell me what is the amount, any net disbursal amount, if there's any processing fee to be deducted from first or it has been deducted, which account it will be transferred to, everything. It will do a calculation also when there's an interest due, approximate interest, and it will take you confirmation. You have to enter an OTP and the amount is then transferred to your account. So it's very simple.
Sorry, Kapil.
Yeah.
Sorry. Okay. If you just go back to that screen, it also talks about again GST on top of this. What does that mean?
GST, since this is a first disbursement, if there's a processing fee, then it's an 18% GST. Account opening fee, na?
Okay. So this is 499 plus 90. Okay. Got it. But on a normal transaction, we don't have it.
No. So basically what happens is if you're doing the first transaction and PF is not deducted, it is deducted from the requested amount. If it is already deducted, then it is not there. So on your second, third, fourth, or nth request, there will be no deduction. It also tell you which bank account you have linked and where the money will and up expected transfer down and what's the outstanding principal after this. Estimated interest calculation, it shows the logic, and monthly also it shows the logic and everything else, right? And you
So
can
it
just
shows the interest. What about the principal?
principal, it's automatic. You have to pay whenever you want. So I'll just show it to you. Let's say now there is 23,000 rupees of principal outstanding, right? Now let's say I want to repay. So now three options how I want to do it. One is I can add this loan account and do an NEFT RTGS. As simple as that and automatically recognize. Second is I have UPI, debit card or net banking. That is the most easiest way. You can click make online payment. You can select you want to pay full amount or partial amount also. In this case, since outstanding is 710, I can select 350 or anything. I can literally write 400, whatever it is, right? And select payment method. It will take me to the payment methods that are there, debit card, net banking, UPI. I enter the amount details, OTP, the same banking flow, and automatically through a payment gateway, the money is received by Volt Money and automatically will be settled within 24 hours. So hope that is clear. And so principal payment is very clearly separate. Interest is automatically deducted. So you will never not even find ability to pay interest until that interest is due. So the interest will due become on first of the month. That is when you will see an interest like a bar here on the top. In terms of tracking transactions, so there's a transactions tab which shows all your transactions. So just as Sharath was saying, interest repayment, it shows -6 +6. Like since it's a ledger, there's a -6 entry and the +6 entry. If you see April, there's an interest principal repayment. You can all track it, all your repayment, interest, debit, credit, principal, everything here from the start of time, and you can also email it to yourself. Last thing, what is that amount is pledged, and if you want to increase the limit, you can click here. It will again take you through flow, and the PF for 500 will be charged because you're doing a new agreement. You can increase your limit if you've done an SIP, and if you want to increase the limit. If you want to pledge more or unpledge it, you can click here, see which funds are pledged, what amount credit limit against what is the value, and if you want to remove pledge more, or you want to see the pledge history, you can do everything here, right? And while in the journey, I believe that Sharath's team will be doing it for you majorly. You have the option to select which fund and how much amount you want to pledge. So that is also very clear. Now I'll jump to the interest calculator. So how it works is basically, let's say,
Kapil, sorry, sorry, like, but when you are saying that actually the limit increasing, right? So you're saying again the charges will be, I mean, there will be charges applicable. What does that mean? Because we are saying that it's annual maintenance of 499 plus tax.
Yes. So let me explain. So today, when you're pledging mutual fund units worth of 1 lakh rupees.
No, I'm increasing the limit. I'm not pledging anything.
I know. I'm coming to that. So basically, you're pledging 1 lakh rupees and setting up a limit of 50,000. Right?
Okay.
You had a portfolio of 10 lakh rupees, but you want to set up 50,000 at the moment. Okay, you have pledged 1 lakh rupees. Now, at the end, there is a pledging charge which I pay to the RTA. Plus, there is an agreement also. Right? There's a digital agreement where everything is there, your name, details, everything from a lender side, with all details of payment and everything.
Okay.
Now, once you have done the agreement, there's a sanction limit that goes. Right? Now you say after 2 months, let's say you say I want to pledge 5 lakh more and make my total limit up to pledge 6 lakh and total limit of 3 lakh. So when you increase your limit, you're pledging more and signing the agreement again. And hence you'll have to pay a charge of 499 plus GST again. So hence, what we suggest is...
Kapil, 1 second. Let me make this easier. For Sandeep and everybody else on this call, here's the easier way to understand this. Each time you go about pledging more units than you've done for the previous time, you will end up paying an extra charge of 499 rupees plus GST.
So, Sharath, just correct me if I understand. Like, let's say now we are actually. So when you mean pledging, actually we are taking a loan. Is that the meaning?
No.
Okay. We are just saying that, okay, so this is our so let's say now we have a 10 lakh portfolio, and then I'm saying, okay, I'll give you 5 lakhs of portfolio for you, and means I'm pledging 5 lakh portfolio with you, and then you tell me what is the eligibility limit for me, right? So on that 5 lakhs, like let's say based on the calculation and other things, you come up with 2.5 lakhs is my limit, which I can consume.
Okay.
So this is one part. Now after 2 months or 3 months, so within that year span, like let's say we are going and pledging another 5 lakh portfolio.
That's correct.
For them. So it means another 499 plus GST will be charged. That's what you guys are saying.
That's correct.
Okay. Got it. And within that previous limit, however, how many transactions we do withdrawing or repaying, that is not chargeable.
That's correct.
Okay.
Every additional units pledged from the previous instant. Okay. Whether it is 1 lakh, whether it's 1 crore, it is going to be 499 rupees plus GST.
Okay. And Sharath, what if like I pledge one particular what do you call like let's say Aditya Birla's one particular portfolio. Okay, I pledged it, and we noticed that okay, it's a non-performing asset, and we want to close that, but we already pledged with these guys.
You cannot close redeem portfolios unless you've got a if it is liened, it's given as a collateral. If it's given as a collateral, the only way you can exit from there is by you closing that loan.
So okay, yeah, we close the loan. So okay, that gets released. That's what you're saying.
Yes, you cannot.
No, but in this case, we didn't even took the loan, right? Like say we pledged it.
Then that's a different story. If you've not taken, then it's a different story.
No, but my question here is like let's say in the 5 lakh portfolio, let's say there are or if you can just go to that.
Sure. So let me show Sandeep. Essentially, take an example. For example, okay. Hypothetically, you have pledged 10 lakh rupees, you set up a limit of 5 lakh rupees, right? What we recommend is, and basis your plan with Sharath, you should pledge max as much as you can because unpledging is free.
Okay, yeah.
Right, because
that is a point of question for me, like whether that is also chargeable.
Because whenever you're pledging, when you're pledging more, I have to pay charges to RTA. That's why there's a charge. So it's not like you pledge 25,000, then again 10,000 for 25,000. It's a recurring charge. That's why there is a 499 plus there's an agreement and all those charges, right? So that is there. Hence, what we recommend is to pledge. If you see that I'm holding this for long term, you should pledge as much as possible, and that's why you should take Sharat's advice on what you should pledge, right?
Okay.
And depending, he would know
And
which ones to pledge. Second is,
can I use the part of the OD, not entire OD?
yes, yes, yes. That is what an OD is, sir. Basically, if you set it up 5 lakh, you minimum withdrawing amount is 5,000 only. That is it. So you can just withdraw 5,000 rupees also or 10,000, whatever you want. It is not mandatory to withdraw the entire OD limit. And that is what the case here on the application is. Hope I'm making it clear.
Yes, thank you.
Sure. Yeah. So, ma'am, this is it's a limit. So you can withdraw like 5,000 today, again 5,000, and repay that 10,000 on the 5th day. So it's up to you. It's people think it's like a
It's
transit
like
loan.
the easier way to put this, ladies and gentlemen, is take it like a credit card. Your credit card can have whatever limit that you all want to set. You all can increase the limit, decrease the limit, swipe the card for how much ever you want within that limit, and basis that you pay your interest.
Yeah.
That's about it. All right, Kapil, let's quickly go on the interest calculator. We are already 1.5 hour into our 1 hour 45 minutes.
Sure, sure. So just Sandeep, last part, you can select, if you've not utilized this, you can select to depledge partially also or fully also, up to you. Right?
Okay. And when we depledge, automatically our limit also will get changed by you guys.
Yes.
Okay.
Okay. In terms of the interest calculator, just to see, essentially it's available on the Gold dashboard, and we'll share a link with Sharath also. Let's say you enter an amount of 1 lakh rupees. Interest is 10.49. It is for 6 months, right? So monthly calculation is 862. How it is calculated is 10.49, 1 lakh. Daily interest is 29. Daily is very important because if you're using for 2 days, you're literally paying 29 into 2, 58 rupees only. You have to not pay 862. 30 days. So this also depends. 28 days, you'll have a lower interest. 31 days, you'll have slightly higher interest. Right? So that is there 862 rupees. How is calculated? If you pay principal at the end, let's say you've taken it for 6 months, you're paying that 1 lakh rupees at the end, straight away after 6 months, not paying anything in between apart from the interest amount. Okay. Your schedule will look like this. You're paying, since let's say we're taking on 25th, on the first month you'll pay 172. On the second month you'll pay 862, 891, because August again number of days are different. 891, 862. Right? And at the end of December, when it's 6 months, you are paying 1 lakh rupees and the net last interest also, and the total paid amount is 1,05,288. Right? You can download this PDF if you want to keep it. Versus, let's say you want to maintain a discipline and want to pay an amount on a monthly basis, let's say a principal also. So if you pay part of the principal monthly, let's say you're paying 3,000 on the first month, then 16,000, and so on. Then if you will see, interest is automatically deducted. First for 5 days 172, 835, 714, 567, 405, 271, and slowly. And the net amount you pay is 1,03,064 only. Because you're paying principal also early, your interest is also deducting, and hence you're paying low. But it's 100% flexible. These are two examples, representative in nature. You can choose to pay, let's say, 50% after 3 months and rest 50% after 6 months. So this is absolutely flexible, but this is an indicative calculation on how or what interest would be there when you withdraw that amount. That is there. And how it is calculated, everything is there. What I believe we just discussed on that. So, yeah. So that's all from my side. Any questions? I think sure they will just stop sharing the screen. So.
Any questions, ladies and gentlemen? I think we've had a this is the first time we finished our webinar in like 25 minutes, but question and answers went on for more than an hour and a half. Alrighty then, folks. I think with that, we'll call it a day for today. And for those of you who would like to listen to this presentation again, I will share a recording of it as and when it's available. It should take us about a week's time or so. But in the meanwhile, if there is specific questions that you'll like to have this addressed or discuss a use case scenario with me, feel free, to either get in touch or we'll have this discussed during our review calls. And we'll get into the details of it at that point in time. For now, enjoy your weekend, and we will talk to you when we talk to you next. Have a nice one.
Thank you, bro.
Yeah. Thanks, Kapil and Sharath. Yeah.
Thanks, Kapil.